Let's discuss market strategy. We're going to do that with Michael O'Sullivan. Michael is Head of Portfolio Strategy for Credit Suisse Private Bank, and he's in Sydney. Michael, thank you so much for joining as well. It's, of course, Europe front and centre. Well, what are we, at the moment, looking at, and which way is this all going to pan out for you?
I think there's three things that are likely in the next couple of weeks. Obviously, the political situation in Greece is a concern. Secondly, worries about the health of the banking sector in Greece and Spain, and an acceleration of withdrawal and deposits could provoke action from the ECB. However, for me, the underlying worry, and the really serious worry, is the fact that the periphery countries are being crushed by these austerity programmes. You compare retail sales or industrial production in the periphery compared to the core, and there really is a sort of bipolar economy developing in Europe. And the underlying reality, I think, is that unless the strategy that's being put in place for the periphery is changed, this crisis is going to roll on and roll on.
Well, it seems like we keep on coming back to it. It seems that the only way this can be resolved is for something drastic to happen one way or the other. Now, if we did see an exit for Greece, are the firewalls strong enough to protect other countries?
I think actually, I mean, the sense of anticipation in markets for an event, I think, is very, very great. And if you look at the effectively, we have a buyer's strike, certainly, amongst U.S. investors, increasingly investors internationally in Asia, with respect to Europe. In that sense, I think the lack of uncertainty that a Greek exit or some other event would bring, I think, would eventually bring in a lot of private capital. In terms of the firewall, companies are already beginning to prepare for a Greek exit. I think the kind of things we would expect to see would be a third LTRO from the ECB. I would hope aggressive rate cuts, a weakening of the euro. There would have to be measures to support the banking sectors in countries like Spain to ensure you don't get banking runs in countries like Ireland and Portugal. Of course, and again, this runs back to the history of the last 2 or 3 years of this crisis in Europe. It shouldn't have to come to this. Policymakers should be proactive, and I think they should be proactive in deciding whether or not Greece belongs in the Eurozone, and the kind of shape that the Eurozone as a structure needs to take in the future.
When we look, of course, not just, of course, if we have Greece leaving the Eurozone, but what we've seen is, of course, the banks are very much at the core of what happens. Bankia in Spain is just one example. So this is the transmission mechanism. Does it mean that you advise your clients to just stay well clear of the global banking industry?
Very good point. Our two key calls, Rish, we're underweight Europe as a region, and we're underweight the banks globally. And there's a whole range of headwinds for the banks globally, regulation being a big problem, deleveraging, and then the euro-specific problems. My worry for Spain specifically is that Spain is today where a country like Ireland was maybe 3 years ago, or even there are parallels to the US if you look at the property market, and if you overlay the Spanish property market on that of the Irish bubble or even the US housing market, then there's a considerable fall in property prices to come yet, and then with the attendant write down in the balance sheets of the banks. So there really is a very considerable challenge with respect to the Spanish banking sector.
Michael?
I suspect that the departure, or the imminent departure of the head of the chief of the Bank of Spain is a recognition, I think, of the magnitude of that challenge.
Michael, thanks so much for your time. Great to see you again. Michael O'Sullivan there from Credit Suisse Private Banking.